Welcome back to the LPR Trading Group YouTube channel. It's Dave again. Today we're going to talk about volume. Specifically, we're going to talk about volume on our high volume cluster type charts or volume charts here. This is just a standard footprint chart that you guys are seeing here. I've just zoomed it out so I can kind of see that histogram high volume areas. Now, if you guys aren't familiar with footprint charts or volume type charts, each one of these prints here is going to be a single candle, okay? A single candle here, if we want to call it that. It's going to show you all of the prints at every single tick value here. So for example, we've got this white area, which is the point of control for this candle right here, and it printed this many contracts on the bid, 466, zoom in a bit more, and 657 contracts on the offer here. So what I want to do is we're going to go through a little exercise here. And what the exercise is going to be is we're going to look at these volume charts to see if we can identify where we're possibly going to get pullbacks into, to get dip buys for longs, rejection for shorts, etc., etc. I just want to show you guys how volume comes into play when we're trying to play or look at these volume type histogram charts. Okay, so this is Friday's price action. This is market open here. What I like to do on these charts is I like to identify higher volume areas on the chart that price can possibly pull back into. Now, for the open candle tends to get a little bit hairy because this is the area where the market opens and we've got this huge influx of orders. People are trying to fill orders at market on limit. We call this price discovery, where the market's really trying to iron itself out. For the purposes of this exercise, I will actually mark out the higher volume area within this print. And visually, for me, this is the area. So what do I like to do on Quant Tower? I like to grab one of these box tools and I'll sort of draw a box like this around the highest volume area. This white area on this print represents a point of control. So that was the highest volume done on this 5-minute candle at the price of 38.20. So now that we've got this marked out, this is what happened in the past essentially, right? This candle has printed out, it's closed up here, it's opened, we can identify this high volume area as a possible tradable area. As we move forward, we can continue to do the same thing. Every time price prints a high volume area that hasn't been interacted with, we can mark that out as potential area for a trade. Now, are all of these areas going to work? Can you go around just marking your chart up with these high volume areas and expect every single trade to work? Absolutely not. But what you can do is you can mark up these high volume areas just like this, and when price pulls back into the area, we can look for clues or pieces of evidence in order to take a trade in our favor. This high volume area was created because there was a balance between buyers and sellers. This was an area where buyers and sellers were fighting each other very hard to claim a price area, okay? Inversely, if buyers and sellers do not agree on a price area, we've got like this imbalance of the market. Now, what does an imbalance of the market look like? Well, it looks like something like this, right? There's just no volume in here. There's potentially one side really taking control. The other side's not applying any aggression. They're just sort of going into liftoff mode, right? Whereas within each of these prints, you have these very short-term areas where buyers and sellers are fighting each other. These are the areas we want to look for. Why? It is under our best assumption that if price pushes away from this area where buyers and sellers were fighting previously, there's likely going to be some action still left here when we come back into this area. So let's fly through this chart and see what we can find. Well, we've marked out this area and we can see as price came back into the area, we actually get a little reaction. Now this doesn't look like much. I actually took this trade as a little scalp trade though. If we get in this trade, say around 38.7 or 38.37, which is somewhere around here, and then we look at the high, we end up getting 9 to 10 points off this trade. Now, there is an expectation that for this trade to work and really work, that we're going to go to highs and break highs if we're going to continue with the trend. Now, depending on how you trade, you might not even take this trade. If you don't have a scalp trade in your playbook, you don't take a scalp trade like this. If you don't have a scalp trade partial in your playbook, even if you're holding for a longer term throughout the day, you don't take a trade like this, and that's fine. So now as price breaks through this area, price tests it, we get a push and we break through this area. This area is no longer valid, right? We've already seen the reaction off the area. We do get a reaction, price pushes up, and then we push straight through it. So what I do in these cases, I delete this area and I move on, right? I move on to the next area. Now, we're uptrending, so I'm heavily in favor of the areas or the high volume areas for dip buys until we can prove that we're no longer uptrending. But if we look at this chart right here, we are clearly uptrending, right? We move over and we will start marking out some of these high volume areas that we see here. This is a small little node right here. I likely wouldn't mark this. You definitely can. I like these bigger areas where there's a huge congestion of volume. You got a big congestion of volume, big congestion of volume. This is just a little tiny congestion of volume. This could absolutely work, and sometimes these trades are the best trades. Why? Because if we mark out this area just like this, you see how small this area is? 38.3450 by 35.75. This area is like a point and a quarter. So what does this mean? Well, if you had a very good area like this, a small little high volume area that lined up with a lot of other stuff that you're looking at, high of days, low of days, pre-market highs, pre-market lows, moving averages, initial balance highs, lows, 50% pullbacks of those areas. If this lined up with that area, you could very well put in 1 or 2 orders within this area, stop behind this area, and risk something like half a point on the trade. And if it doesn't work, it doesn't work. Big deal, we move on, right? So anyways, we'll leave that there just so we can go through the process here. We go on to the next high volume area. Now, I just want to make sure you guys are understanding these charts correctly. This right here is a 5-minute print. You can see this little red area on the inside here. That's the actual candle, right? Green candle closed, red candle opened. We pushed up, down, and we closed here. Next candle opens, it's green. You see the green print in the middle. We pulled back, pushed up, closed here, okay? So by the time this candle right here closes, this candle closes, we have a high volume area that we can look at here. Now, what is the high volume area that we can look at for possible pullbacks? It's going to be right in this area, right? So that would be our high volume area that we'd be interested in if we get a push, a possible pullback, hold for the buy. So to make this easier, we can actually squiggle over to this 1-minute chart here. 1-minute chart, and we go back in this area. Right here. Okay. So here we go. Here is that high volume area that we had marked out. Price pushes away from it. It comes back, holds. We hold with volume at the bottom. We try and print the sell imbalance here, which means shorts are actually trying to aggressively short this thing. They get trapped, throw a buy imbalance inside a high volume area. Buy, set your stop or set your stop, and you're off to the races here. Okay? And that's where the trade ends up flying to from there. Okay, so as we push up, what do? We continue to mark these high volume areas because we want to try and get in these trades at value or best price, right? So here's another high volume area. This is a high volume area that's been untested. We pulled back, we held, candle closed up here, and we just flew. So it's been untested. We can absolutely mark this. Price has not gone through this. Now we start flying. Most people are going to freak out thinking, you know, they missed the trade. There's not going to be another trade on the day. If you're just strictly looking at price and volume, which is this, what I'm showing you here, there is going to be another trade on the day. You just have to wait and be patient. Where's the next high volume area? Right in this area, okay? We've got a nice high volume node here. This print actually closes at the POC. The next one opens. We push up. Do not get impatient. What happens? We pull back right into the lower area of this high volume node, and we go for a push. Let's see what that looks like on the 1-minute chart. So here we go. We make high volume node right here. Actually, this thing was the high volume node. This is the lower end of it. We push, we pull back, hold, and move to the upside. I really like when we hold high volume areas or lows like this on volume. You see how there's volume into this low? This 1-minute print right here, very thin volume at the top, and then you get this expansion of volume at the lows. What does that mean? at this point in the candle, nobody is really considering this print right here. There's not any real action on this print. And then all of a sudden, as soon as we get deeper into this high volume area, what happens? The buyers step in and they start fighting aggressively with the aggressive sellers. That prints volume. Volume is visible on our charts, so we can identify this. We hold volume. Even if you don't want to get in here, next print opens, buy and bounce, huge buy and bounce. Buyers are definitely in control. Buy, stop, and let this thing rock, right? And that's the trade you end up with. We will go through some more here. This right here is also a high volume area. Why can't we mark this though? Because price has already come through this area and picked up that volume. But in real time, and these are 5-minute charts, remember, you have time here. In real time, if we see this 5-minute print, we open here, it pushes down, pushes up, and closes at the highs. As soon as this next print opens, this one right here, this high volume area is exposed, right? Price has not gone through this area yet. So what can we do? We can take our tool, we can mark out the thickest area of the high volume node right here, right? We mark out the thickest area of the high volume node. We go back to the 1-minute chart. What happens? Price pushes up, pulls back. Where does it pull back into? The high volume node. We hold and we go. Okay? Go through a few more examples here. Price pushes up, we consolidate. We found balance up here. Weak high of daybreak. We start moving down. We don't have anything really up at the highs here. As we start moving down, we start getting volume and POCs forming into these lows, right? We start getting these like thicker histogram areas where price is actually bulging out. So like thin up here, and we start bulging out at the bottom here. We start bulging out at the bottom here. So these are areas we could potentially mark as high volume areas. So if we just marked something like this, we go back to our 1-minute chart, the price pushes up, we pull back into this area. What happens? Buy and balance. We've got volume inside of volume printed at the bottom of the print, which I really like. Buy and bounce, buy and bounce, buy and bounce. Potential good long here. Now this one just popped for, what did this one pop for? Let's say 74 up to about 5 points, okay? About 5 points. Now if you have a scalp partial in your playbook, you could have got a scalp off, stopped out break even, or stopped out for a loss. I did not go through this day after the fact to see what was going on, if it was a good day or a bad day. We're looking at it right here, live, the first time for me as well. Okay, so we've got that one as well. Now what do we do when price pulls back and pushes through the high volume node that we just marked? We delete it, right? Because all of the volume in that area is accounted for now. You can see we pull back, we held. See when we pull back again? Volume, volume. That means this area that we had marked out was correct. Why? There was volume there. There was interaction. Buyers were aggressively trying to come in and hold the sellers up. Are they going to do it every single time? Are they going to make it happen every single time? Absolutely not. Okay? Absolutely not. So that area ends up failing through. We've got to get rid of this, right? This is no longer an area of interest for us. So we delete this. Now what do we do here? We look for the next high volume area. Where is it? Right here. Big high volume node at the lows. My favorite high volume areas are, if I'm looking for a long, the ones at the lows, or if I'm looking for a short, up at the highs. Now see, this is the point of control down here. If the point of control was up here and this was super bulky up here at the highs, and we had a really thin volume up here, I would have marked an area up here for the potential shorts. Because if price came up here, I would have looked for the reaction and possibly got a scalp short off this. Okay, we're looking at longs now. Here's a high volume area on the long side. And people in the order flow world or volume histogram world call these P's and B's or clubs and hammers. If you look at this print right here, I mean, you can sort of see, well, it looks like a B. I have mine on histogram, so you see the volume on both sides, right? You see the buy-sell volume, so it's histogrammed. But if you just see total volume, it would just be one side. So it would look like this. it will look like a B. Okay? So this is our volume area right here. Price pushes up. We pull back. Where do we pull back into? Most importantly, we pull back into the high volume area, plus where is the volume when we pull back on this candle or on this print? It's at the lows, telling us there's an interaction between the buyers and sellers in this area. Let's see how this looks like on the 1 minute chart. Here's the area we marked out. Here's the area we come back into the high volume area. Volume starts getting printed as we get back into this area. How do we know volume starts getting printed? It just looks like another white line. Well, if you just simply take 1 second and we realize that the prints or the values inside here, 700 times 529. Let's go back and just quickly, just have a quick look. Much lower, much lower, much lower, much lower, right? So we know that there's an extreme amount of volume being printed in this high volume area. This is interest, right? These are buyers trying to hold up the sell pressure and push price of the instrument up. Fly back to the 5 minute chart here. So we held there, that was great. I already have this one marked out. That might have been from Friday. Okay, so we continue to push up here. And now we printed volume down here at this low. You could essentially mark this one out as well. Just in case price came back down, we could possibly hold that again and move. For the sake of this demonstration, we'll just move forward. Okay, so we do have a POC here, but we don't have this very defined high volume area, right? So we don't want to mark anything on this print. This guy right here, we have nice high volume. This guy right here, we have nice high volume as well. So this was a short period of consolidation where there was an agreement on price. So if we go like this and we mark this high volume area here, what do we wait for? We don't want to try and trade the breakout because most of the time those breakout trades don't work. There's a time and a place for those breakout type trades. Most of the time there's not though. So what do? We just wait for price to push away from high volume, pull back, hold, and we look for a trade. Let's see what this looks like on the 1 minute chart. Here we go. This is our short-term consolidation period, about 10 minutes. What happens? Price pushes away. We get a big dump. It really looks like sellers are in control here. We get back into the high volume area. We get buy imbalance at the lows. Along with buy imbalances, what do we get? We get this accelerated volume at the lows. We actually push off it again. As we pull back into this area, we make a new low, which traps a lot of shorts essentially, stops out a lot of bad longs or weak longs. But as we're pushing down, we're printing volume, printing volume, printing volume, imbalances, 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 all to the buy side. Inside of a high volume area on the 5 minute chart. If you're an EMA trader, right on top of the 50 EMA, right? So there's all of these puzzle pieces saying, wow, this trade's really lining up here. Now, I'm going to say the only reason I had these EMAs on my charts is because a lot of people use them, right? There are a lot of traders that are using the 20, 21 EMA, 50 EMA, et cetera, et cetera. So I have them on my chart for reference as a puzzle piece. I would never set an order to just say blind buy the 50 EMA. Nope. But if there's a situation where I have volume, which is what I primarily trade, I have imbalances, I have a 50, I have a trend moving up, I have proper risk versus reward, okay, that 50 becomes a piece of the puzzle, right? So let's move forward here a little bit. We push up here, we get another short-term consolidation period. I would not have marked this. Why? Because I've got price right here that's taking out this whole area. Now these areas could still work, right? As you can see right here, if we drew a line over, we push up, pull back, hold, move higher. These are not areas that I like to mark, okay? This guy right here, I would have probably marked it something like this. See what this looks like on the 1 minute chart. Okay. This is where we're starting to get like pretty fluttery into the highs here top. We go for a really weak high break, right? Weak high break, can't follow through, fail, push down, actually try and hold the high volume area. This is how you know you have your areas marked out correctly. Very nice imbalances here. We're trying to hold this high volume area. Buyers want to try and bounce this. But of course, if we look at the day as a whole, I mean, we've moved up a whole ton on this day, right? A whole ton on this day. So, I mean, common sense says maybe we're not going to try and buy 5 points off the highs. Maybe we need a deeper pullback. Maybe there's no trade up here. Maybe we just have to wait. It's lunchtime, right? So that's that one there. Let's go back into the 5-minute chart here. We'll crush this like this. Okay, yeah, now we're into like 2 o'clock. We'll delete that one as price moves through it. This area is kind of 50-50. Volume's not amazing here. You could mark out something like this. It's not the best. It's not terrible. We could leave it there just to see. Price pushes up, pulls back. Candle closes down here, moves up, takes out all this volume right here. You would have never got a trade here based off volume. We push up, push up. We move price up here. I would have never taken this trade. You could argue that this is high volume right here, right in this area. You push up, so you sort of rally, you base out, and then you go for another rally. What happens? We pull back into the area, and we go for a little high day push here. Let's see what this looks like on the 1-minute chart. Again, I would not have taken this trade for sure. But here it is, little consolidation period, right? Push up, pull back, hold volume, and go for a push through the highs. These are areas of the day or times of the day that I don't love trading, but we'll go through it anyways. Okay, here's a decent one, especially for later in the day. We push up, we base out, we make a new high, we fail. We fail and we get bought back up right away. Where's the volume? Well, the volume's below where the candle closes, right? Telling us that buyers stepped in here at some point and tried to hold price up. So what do? We draw a little box right here around our high volume area where there was an interaction between buyers and sellers. We go over to our 1-minute chart and we see what the reaction's like. Well, what happened? This is where our volume got put in. Price pushed away. Our job as a trader is just to be patient and wait for price to return to the volume area, give us our puzzle pieces that we lay out in the room every single day to find the next buy and go for the next move, right? We look at this. Couple buy imbalances into the lows here. This is also 320. I don't love this time to trade, but this trade works fantastic, right? You got volume, we push away, we pull back in, we hold. We actually show some aggressive trap sellers here, followed by buyers aggressively picking up price and continuing to pick up price and going for a push to, which is probably your first target right here. So if we were in, I don't know, 0625 and our first target is 1150, you got 5 points. And we'll move forward. We go into end of day, and that's about it. So what I'll do is I'll wrap up this video there. This is how I use and how most of the traders in the room use these histogram type volume charts in our trading, right? We're looking for the most valuable areas to find a pullback, to buy or short, depending on what the current trend is. And we try and hop in the trade at best price. Now, there are days like this day that we just went over, for example. If you just bought almost every single high of daybreak, you would have done okay, right? You would have done okay. Like typically breakout traders are buying, you've got a consolidation period. They want to buy the high of this breakout, right? Now, I've traded like this in the past. I don't have a ton of success doing this. I still take these trades sometimes, but more for scalps. Now, the way we want to trade in the group is we want to look for these pullbacks. We call them value pullbacks. We want to find a value area to get into this trade. So for example, right here, we've got a consolidation area. So now if all of the breakout traders are waiting to buy the consolidation break, they're buying up here, right? So that's going to be about 38.84. What are we doing? We've identified volume at the lower end of the range, and we're looking to buy here. So when we buy here at the 72s, by the time it gets to the 84s, and it breaks through on accelerated volume and lots of buyers, which is the breakout traders buying, we're selling to them, okay? We're selling to them. And you can also hold some for a bigger move, of course, but our first piece, or our first position, we're selling to those breakout traders. And that's how we like to trade in the room. If you guys have any questions on this video, please let me know in the comments down below. Like, comment, subscribe. I hope you guys liked the video. I know I haven't been around in a while, but we've been super busy with the room, super busy with life, and we'll get back to it and start pumping out some more content. Thanks a lot, guys. Be safe.